For joining me today. My name is Viktoria Soltesz, and I will be talking about moving money, and I try to explain to you a bit more about how banks think. You must have seen me outside. There is a little booth what I have where I am giving out moving money, my book about the banking industry and all the payment challenges that our industry, iGaming and gambling, is facing. And this is the subject for my workshop here today. I would like to encourage everyone that please do share your issues, problems which you're facing. This is a safe space, even though that we are being recorded. I do see a lot of gray area issues as well. So let's figure out together what is the best way to move those funds in a legal, secure, and cost-effective way. So I can start with explaining a bit more about myself. How did I end up in payment? Because I've never seen anyone who was actually intended to work in payments. Everybody is just somehow ending up there randomly. It was the same situation with me as well. Actually, I started in Cyprus around 20 years ago as an accountant. I was setting up tax structures, so my original profession is a tax consultant and a tax accountant. And back at the day, there was no such a thing as compliance. Back at the day, we just opened a company which was supporting the main activity, which was most probably outside of Cyprus. And we opened a bank account, started to invoice people and optimize the tax, obviously within the legal requirements. It had to be legal invoices which are supporting the payment, but payment was never an issue. And I was running the payment department of a big shipping company. And one day, my boss, who was actually the owner of the company as well, he came to me and he said that there's a problem. The bank is asking questions about the money movement. Sort it out. I don't know why they are doing that. I don't really understand what's going on. This is my money. They have no business of what I'm doing with my own money. And I was like, okay, don't worry. I will figure it out and I will take care of it. And indeed, that was a problem. We had a loan agreement, and on that loan agreement, there was a percentage set. I remember it was something like 5 or 5.5%. And the banker took energy, effort, and time to calculate what should have been the loan agreement's interest, which should have been transferred, and we missed it by. It was not that much, it was like a couple of percentage, and that was a big issue for the bank. So then I started to ask myself a question that what's going on? Why is that the bank getting involved in all of these questions? And then started to ask more and more questions. Google just started, so I started to go over to different chat rooms and the different forums where people discuss all these things. And I realized that no one has a clue what happened with the banks. All of a sudden, everybody's asking questions, and everybody was clueless. Why? At that time, I was doing accounting for a lot of other clients as well, and they started to face more and more problems with the bank as well. And I realized that, okay, so we are onto something here. Something is changing, and I need to understand what's going on, because I'm the accountant. Everybody's coming to me for answers, and if I don't have an answer, I look stupid. So I need to find out what's going on. So that was my first experience with payments, and when I Googled a bit more, I was speaking to the banker, I was speaking to different clients, and I saw their problems. Then I realized that indeed moving money is a problematic situation. Not many people understand what is the problem of the bank, how banks think. Many people still think that banks are just making my life hard, or the bank is trying to do a big brother, and the government always wants to see where the money flows. Yes, but there is a reason. And this is what I want to tell you today, to show what is the reason how banks think and why banks think in a certain way. Let's go back to the history when banking started. I'm sure that everybody knows about that. Back at the day, there was a village. I give you a chicken, you give me a bread, and this is a barter. Of course, it was not sustainable, because the person who has a bread and needs for a chicken and finding that person at the same time, it's very unlikely. And since we entered into a big global trade and the economy of the different countries grew, that was not sustainable. So then we came up with the money. And the money was something which is representing some kind of value. Here, we need to understand that there is a trust system, which is maintaining everything. So that means that if I want to give my chicken for a bread, and I can't find the person who is needing that chicken at that moment and has the bread for me, we need to find something which represents value, but we both trust in this. And that's why I'm highlighting this, because the trust in the banking system is what is running everything as of today. After the Second World War, there was a huge chaos in the world. We just came out of the war. All the different countries did not really trust each other. They just basically killed everyone. So America, who came up as a winner, said to everyone, I understand that no one is really trusting anyone. Here I am, more or less untouched by the war. Here, everybody is trusting that my economy will survive the Second World War. Trust my currency, and bring me all the gold which is backing up my currency. So they started to collect all the gold in the world, putting it in the American safes, and based on that, they issued the dollar. And back in 1944, there was an agreement, the Bretton Woods, which said that America is guaranteeing that the dollar can be exchanged for 35 cents per an ounce at any given moment. So this is your security, that if you trust my economy, if you trust me enough, and I'm America, why you wouldn't trust me, you will always be able to exchange the dollar to gold. So trade with me. Use my currency as a common value. Trust me. This was going perfectly for about 30 years, when Nixon, in 1971, gave a little speech and said that, guys, yes, there is a bit of a disturbance in the force. Temporarily, I'm going to erase this. I'm not going to exchange the gold for dollar, but trust me, I'm America. Trust me, there is still value in the dollar. And force everyone to trade internationally using the dollar, whereby it creates a demand, and if there is a demand, obviously the value stays in a certain level. He said temporarily, but this is what we are still having today. The trust in the system is what is giving the basis for the economy as of today. The money has no actual value other than there is a government behind it which is securing that if something goes wrong, they are covering the value of the money. And why I'm saying that? Because this is the basis for the economy. What you need to understand as the first part, how banks think and why banks are doing certain things as they do. Now, let's go back to the Second World War, when a lot of disturbance happened in the world, and more people realized that if they are opening up and going abroad, they can trade with other countries. So they did. But that started to put things in jeopardy of who is getting the tax for those kind of trades. And when the internet came back at the 70s, at the 80s, and mainly at the 90s, people realized that, why am I paying so much tax in this country when there are other countries which are, charging me less tax? And since I'm on the internet and I'm global, why don't I just set up a company there, be clever, optimize my tax, and then in this way, I can be global and I can pay less tax. Perfect, right? Now, the problem was that if no one would pay their fair amount of taxes, we couldn't run a healthy society. That would be a problem. Imagine, you don't pay your taxes, the policeman doesn't come out and save you. You don't pay your taxes, the ambulance is not coming out and take you to the hospital. So the government needs some kind of money to operate with, and that's why they are collecting taxes. It's a whole different story if you agree with the government or not, but that's the basis idea. So this is how the system is built. You pay your taxes, and I'm taking care of you. But I can't put a policeman next to everyone to make sure that you're not doing anything illegal and you're paying your taxes right. So those countries realized that, hey, wait a minute, there's a lot of tax money going out of my country. I can see that the people got creative and they are taking their business elsewhere. They are taking them to Panama and the BVI and incorporating companies. So they went to those countries and said that, hey, what are you doing? Increase your tax. But it's basis of the fiscal policy that the country can say that, you know what, you're not going to tell me what to do. This is my sovereign right as a sovereign state to do whatever I want and charge whatever money I want for my taxes. And why wouldn't they do so? Because if your economy is so small, you don't have agriculture, you don't have industry. What you have? Sunshine, beach, and low taxes. How to attract foreign capital is to advertise your country as a beautiful little island or a small little hidden gem, whereby, by the way, if you're incorporating a company, you would pay less or absolutely no taxes. So those countries did not really want to say that, yes, I agree with you, I should charge those hefty taxes as you do, dear America, dear Europe, or whatnot. So all these countries, they had only one kind of weapon in their head, which said that, okay, you know what? All the countries who are trading with you, I'm not going to accept money coming from those kind of areas. I am running the banking system. I am responsible for the whole economic system. As I said, I run the trust in the whole economic system. So I'm telling my people who to trust and who to avoid. And in this way, I can encourage people not to take their business elsewhere and so-called optimize, or even horrible ways, evade any kind of taxation, but make sure that they are paying their fair bit and they are playing with according to my rule book. So that's what happened. That's what we called a regulatory arbitrage. When there is an arbitrage opportunity between different countries, different regulations, and that's how advanced governments can encourage people not to take their business somewhere else and make sure that everybody is paying their fair bit of taxes. So if we summarize that, the main way of how to maintain a healthy society is to enforce everyone to pay their fair bit of taxes and make sure that people are not committing any kind of crime or trying to cheat the system. And as we said, they can't put a policeman next to every single citizen. How are they going to enforce these rules? To catch them where the value is trading through, which is actually the money and how the money moves. So who is responsible to enforce those are the ones who are handling the payments. Who are they? The banks and the financial institutions. So the government said to the banks and all the financial institutions, every time you're holding money on behalf of someone else, or even touching it, or even executing any kind of transaction on behalf of a third party, I want to know about it. And I want to make sure that you are doing it right and you are doing it according to the rules. Otherwise, I'm going to shut you down. So all the payment institutions and all the banks started to be afraid. Oh my God, if I'm doing something wrong, that's one thing that company goes down, but my financial institution, my banking license is going down with it. What can I do? How can I avoid that? Well, I need to embrace my compliance and make sure that everything is happening according to the rules and the regulation of that given country. And this is when we started to learn about compliance, and this is the reason why banks and financial institutions are giving you a headache and asking all for those documents to make sure that they understand everything. Now, of course, I'm bastardizing things because there are so many little details to that, but what we need to understand that there is a reason why banks are monitoring all the transactions, not because they decided to do so, but they are forced to do so by the regulator, by whoever is giving them the license. So if we see money movements from this perspective, then we really understand how to present any kind of money movement transaction, how to present your own business to the banks, and understand what the bank is likely to allow or likely to restrict or freeze or take or reject completely. So after I learned all of that, I realized that, wow, this could be something here, because everybody seems to have a problem with the banking, but no one is really talking about it. There is no overall common understanding why banks are doing certain things. If you are of a compliance department of an iGaming gambling company, it is a whole different approach than if you're working for a financial institution. Different countries have different rules and different regulators and different set of documents that they are asking. And different person in that compliance department might have the same documents, but give a completely different outcome and a different decision based on who is on a holiday, who is a starter, who is a senior compliance manager, or who is not. Why? Because the lines are sometimes very blurry. So then I realized that, yes, there could be a good value that I can communicate to people. That's one thing that obviously I understand the taxes and I can advise them, how to set up corporations whereby the tax can be optimized. But also, it's no longer the taxman that you have to fear from. Nowadays, these are the banks. And that should be the first step of the planning. And since you are a business owner, or you have any kind of responsibility to make sure that the money flows in a certain way and the money is reaching all those relevant parties that it's intended to. So for example, how you're collecting money from your clients, your players, as well as how you're paying your suppliers, it is your responsibility. And every time the money moves, there is a risk and there is a cost involved. So it is your responsibility in this very cutthroat, very competitive environment to understand that what are your risks when it's coming to banks and what are the costs which are connected to that. So that's just one thing that we are opening an account and we think that yes, that bank account can handle all my transactions forever and ever, but maybe it's not the best solution as of today. Whatever was good yesterday, maybe it's going to be completely different as of today. Why? Because there are a lot of technological advancements. There are a lot of changes in the regulatory framework. Your business is changing. The overall finance industry, the fintech is changing all the time. So it's your responsibility to keep up to date with ever-changing requirements, technology, innovation, and then understand what are the best way for you. So there is no one size fits all. And this is what we do as payment consultants. We make you understand how to see the money flow through your group of companies and understand what are the risks and the costs associated with it. Where the money comes from, how much, how often, what currency, who is doing the currency exchange for you, is the bank, the high street bank, who is doing the currency exchange, which is usually much more expensive than a dedicated company for that. Then understand who are those financial institutions who are handling your funds, where are they licensed, can I trust them, how quickly they open an account for me. Because if it's too quick, maybe they open an account for someone else as well as just as quick. And what if that other client of the bank or the financial institution is doing something stupid, which is affecting the financial institution as a whole? How safe is my fund within that same financial institution? Well, how is it going to affect me if that bank or that financial institution, one day they tell me that unfortunately we lost our license and we just freeze everyone's fund? How is it going to affect you as a business if you can't take money from your clients from one day to another, other than your fault? And also, do you do any hedging? Do you make informative decision of what is the current banking costs? Do you even challenge that? Because as we said, your company is changing, your activity is changing, your volume is changing. If you understand that all the energy and effort and amount of time that a bank or a financial institution already put in you, you understand that you are a desired customer and it costs so much more to the financial institution to start a relationship from scratch with someone else other than to keep you. So maybe there is a good opportunity for a renegotiation of the fees, renegotiation of the terms, because your business is valuable. Now you already have some kind of a relationship with your bank. Also, you need to see how the money is leaving your company. Where do you need to pay out your suppliers, your salaries? What is the currency that you are using? How much again, how often, and what currency? So if you put everything in perspective, then you realize that there could be a lot of high-risk areas that now that we are talking about it and we are thinking about it, there could be an opportunity to improve. There could be an opportunity for technologically to improve things. There are new ways of collecting money from your clients. There are new ways to pay out your players or your suppliers. And overall, what are the costs which are related to that? So this is what we do as payment consultants. So I wanted to talk about your issues, your problems within your company. So that's when I would like to encourage everyone to raise an issue, give me a case study where we can talk about and see that what could be the problem with that. Anyone has any case studies maybe? All right, if not, I can tell you a story which was affecting the whole financial market as a storm. It was about a license which originated from Canada. In Canada, there is a so-called license which is a money service business license. The money service business license is regulated by FINTRAC, which is a Canadian fintech regulator, but somehow there is a loophole in the system which allows you to go to Canada, register a company, pay somewhat like $1,000 Canadian, couple of thousands for the lawyers if you want to engage them. If not, you can just do it on your phone. You don't need a local director. You don't need local submission. As a matter of fact, you don't even need to submit anything about your activities. Therefore, you don't even need to pay taxes on that. And with that kind of license, as a currency exchange kind of license, you can act as a financial institution. You can hold funds on behalf of third parties. You can execute transactions. You can exchange different currencies. And you can even accept clients, businesses, individuals from Europe and from the States. That was a loophole in the system. So what happened? A lot of companies went there and either incorporated a company for themselves and regulated on the Canadian FINTRAC and posed as a financial institution, started to collect customer deposits, started to act as a financial institution, and put there that it's a Canadian regulated. Now, if you're not in the business and you don't know about this, you look at the regulator and you say, Canada, this is great, it's a tier 1 country, I'm going to trust this financial institution with my money. And it doesn't have to be the financial institution who is intentionally doing anything wrong. It's enough that they are onboarding one client, which is a bit on the gray side. They are doing something wrong. The whole financial institution as a whole gets frozen by the correspondent bank, or they just actually lose the correspondent rails, and that affects your own money as well. Now, if you don't know that, you might actually don't see the risks. And who is the one who is advising you on that? Maybe not your lawyer, maybe not your accountant. You don't know what you don't know. So what I'm usually starting with, that if anyone has any money in a Canadian regulated MSB company, maybe that's not a bad idea to start the investigation there when you get home and ask your accountant that where is the company funds are kept. So that was one of a very, very interesting case study. Maybe the other interesting case study is that when a financially licensed company has a European regulation, that means that they can only onboard European companies. So that means that by law, if you have a European financial license as a bank, as an e-money institution, as a payment institution, usually you are only allowed, or there is a percentage what you can only allow to onboard European regulated, European registered companies. So many of the Curaçao companies created a European payment agent in order to get those kind of payment provider or European bank or European e-money institution. Now, obviously, the regulator is not stupid, so there is going to be some kind of checks around that. So that could be also some kind of a high-risk area of your finances that you want to pay attention to. And what I'm usually saying is that, yes, we are now in Europe, so most probably all the shareholders and the directors of the companies are sitting in Europe. But if you do not need to bring any money to Europe, so if you're only targeting, for example, Latin America, and you've got a Curaçao license, and someone is advising you to open a European payment agent, maybe it's not the best idea, because the European companies are overly regulated, are always under the radar. So if you don't have anything to do with Europe, better to avoid Europe. So that's what I'm usually saying. The other very popular thing, what I saw, which was a very common setup, is the Dubai companies. So many companies opened in Dubai and took advantage of that. We are not going to pay any taxes in Dubai. That's great. It's a booming hub and all good. Now, the problem is that Dubai is not only very close to Iran, but also they are not really following the sanctions after what happened with the recent wars in Russia as well. So the European Commission put Dubai on the grey list. They came off since then. But there was a big issue about how Dubai's compliance is handling the funds. And it's one thing that once you're opening a Dubai company and you're generating any funds, but usually the Dubai financial institutions are not necessarily supporting these activities. So you have a very bad headache to open a local bank account. But I did have a lot of clients who actually generated some profit in Dubai, and they wanted to bring into Europe and said that, okay, now the shareholder wants to buy a house, the shareholder wants to buy a car, and there was a big problem to actually shift the money from Dubai to Europe and declare it in the local bank accounts. And Dubai was not stupid. Dubai was actually enjoying this situation because they said, oh, you can't take your money out. You have to spend it here. You have to buy my properties. You have to spend it on my restaurants. You have to, put all the money that you generated in Dubai within my ecosystem. So they were not really motivated about being the transit country where the money just flowing through. So yes, when you have these kind of companies, usually the money is having a big trouble or a very high cost or a very hard and complex setup to be able to leave Dubai and enter to the shareholders' account in Europe. So those are just the basic issues that I'm dealing with day by day. So that's what I thought that we can create this workshop today and discuss your real life cases. Maybe someone wants to share that's any kind of stories what happened recently, so we can discuss it now. No one? Everybody's happy with payments and everybody's happy with the banks, right? No one has any problem with anyone, right? All right. It could be, also there was one case, which is a very usual case, when someone is setting up an offshore entity, and that offshore entity, again, is generating some kind of profit. Many times at that offshore entity, you don't even need to do any kind of submission. So there is no audited records, there is no accountant who is checking if you're doing something, what is the profit that generated, and from that offshore entity, you want to send the money back to Europe or back to the States, and you do have a lot of headache with that.
Can you open with a Dubai company, let's say Gibraltar's or any other bank account? Would you recommend that, or would you recommend to have a Dubai bank account connected to a European bank account?
It depends. Technically, nothing stops you to open any kind of bank account with any kind of company. It's up to the financial institution who is opening that.
Would the European bank accept Dubai Limited as account holder?
There are some financial licensed institutions in Europe who are accepting these kind of companies, but obviously you still need to prove that where the money is coming from, if it's from alleged sources, and also plan accordingly that the money is flowing through. But yes, there are some financial institutions who are having European rails and able to accept money from these offshore and even Dubai companies. So I have seen that there are some European regulated financial institutions, usually e-money institutions or payment institutions, who are accepting non-European companies as well. Obviously the price is higher because they are taking higher risk with that, but there is a possibility, and then you're introducing the money to Europe. So it does happen sometimes, yeah.
You would have a list if we would talk directly with you, with which banks that could be managed.
Yes. Also here you have to be always careful to understand that whatever is working as of today might not be the best solution tomorrow. So you need to see what are the prices and what are the terms and conditions which are offered at that given case. But usually what I say is that before you are even starting to send the money, the best way is always to plan. So when you have any kind of idea before you start incorporating the company, that's why it's better to speak to a payment consultant or someone who is understanding these payments, because they can tell you upfront what is desired and what is not, and then you can set up the companies accordingly. So for example, when you have any kind of operation and you've got, let's say, you live in Germany, you've got German clients, everything is happening in Germany. Why would you go to the BVI and incorporate a company just to cheat some taxes? It's not the best and not the most cost-effective way, let alone talk about that it might not even be legal. If you're living in Germany, eating German food, breathing the German air, you should pay German taxes. And the banks, the banks are responsible to enforce this as well. So that means that there has to be a very solid reason why are you setting up a company, even if it's not outside of Europe, even if you're incorporating a company, for example, in Malta or in Cyprus, you have to say that the reason why I'm incorporating a company in Cyprus is because either I have a director locally and he's managing the company, or because my team is in Cyprus and that's where I've had the office. Look, this is the office utility bill. So the bank and the financial institution always have to be super certain about that. You are not here to cheat or evade or even optimize tax. There is nothing wrong to be done here. You just happen to live in Cyprus, and that's where it happens to have lower taxes, and that's why you have this, this company in the setup. So if you appear lower risk in the eyes of the bank is more likely to offer you services, and the lower the risk you are, the lower the risk of the financial institutions and the banks and payment service providers that you will be able to work with. Simply because when there is a big bank or a big financial institution, they do not really like to rock the boat and take the risk with any new client. So that new client has to really prove that you are not threatening the whole operation, you're not threatening my whole license. It's safe to take you, therefore I'm taking the risk with you. And that's a big problem, for example, with startups as well. Because when you're a startup, many people don't know who are you. Banks are looking at you that I don't know you, I don't trust you, I would rather avoid to work with you because you haven't proved yourself. So if your operation is doing something even unintentionally wrong or illegit or even just like sliding through some regulatory requirements and you're not fulfilling something that you should, that overall can risk the whole existence of the financial company or the payment service provider. So what we really see on the market is that when there is a financial service provider, a fresh license, or those kind of offshore licensed financial institutions or banks, they are more likely to take these risks with higher risk industries as well. And that's why you as a company also need to do your proper due diligence on that financial partner or a bank who is executing your transactions, who are holding your funds, because more established, more serious license, basically the more expensive the license, the less likely they're gonna risk it for you. Then you see that who is the financial partner who is willing to work with that setup. And there are multiple ways with that. So now we are obviously in this industry with iGaming and gambling, so it's crystal clear. If you've got a license, where are you allowed to trade? The bank obviously knows that, and that's when they are taking the risk with you. But many times we see that there are a lot of question marks when the compliance check is very subjective. So for example, they are evaluating your website based on the look. If you have any typos, there are certain rules and criteria from the card schemes as well as on the financial institution or bank to make sure that you've got the contact us page, you've got your terms and conditions, you've got your privacy policy, you've got your GDPR set up properly on the website. And if not, they are deeming you to be high risk, which you might actually be, and then they might reject you even though that you are not having that much of a risk that it looks like. So that's also one thing, that how much is the risk of the activities actually happening, but that's also another question, that how do you look like in terms of banking compliance? How much is the risk that it's deemed? And I'm just going back to the original point when I was saying earlier that the compliance could be very much subjective many, many times. Because whatever is good for that person, maybe that person is on a holiday, the next person in the compliance department evaluates things differently. Because many times the compliance is just giving you certain ideas about make sure at your best opportunity that all the documents that have been submitted, for example, are legit. But there are certain ways to look at it. For example, for me, this is blurry. For someone else, it's not blurry. For me, I think, yes, it could be a utility bill of an electricity bill for like 80 euros. Someone says that, no, I don't think that 80 euros is proving enough that the person is living under that address. So there could be a lot of subjective decision on that. Any questions?
I have a concern about Curacao.
Please, yes.
So we were like, I listened to a few panels where there was the topic touched on illegal gambling, right?
Mm-hmm.
Curacao license is a bit of a tricky part. They allow to provide services everywhere except Curacao.
Mm-hmm. Exactly.
But let's say you heard Croatia, right?
Yeah.
Lithuania, for example.
Yes.
To be able to operate online gambling, you have to have a local license.
That's correct.
Would be your position, or like, I don't know, any comment you guys have?
Yes, so I completely agree with you. It is a very tricky situation. Now, as by the law, you have to have the relevant license to provide certain services in certain areas. But in case that there is a lack of regulation, that's when all those, let's say, Jolly Joker licenses can come in, which was back in the day Curacao and Malta, and now obviously this is closing down. So what the regulator says is that if I'm going to country X, and that country X specifying that for that kind of specific game or casino or betting activities, you do need to have this and this and this license, then as a financial institution, I'm either looking at the legal opinion or I'm looking at the license, and then I see that yes, because the law firm confirmed that those activities locally are not illegal, then you can do that, and that's when you are executing those activities, and that's how the payment provider is happy to serve you, happy to open an account for you, happy to move funds for you, because they are certain that the activity is not illegal. Now, the big question comes when there is no regulation locally. So, for example, in case that we are going to, I don't know what was that country, maybe they even started their own regulation, but I think even 5 years ago, there were a lot of European countries which did not have a very clear licensing law for certain activities. And what your argument was, as an operator, is saying that, well, if I'm going to Croatia or Romania, or I think even Greece, like 10 years ago, definitely there was no Greek license, then you can say that since I want to be regulated, but unfortunately there is no regulation. So what can I do? At least I've got a license, so there is a governmental body which is monitoring what I'm doing, and they are proving that what I'm doing is legit enough and good enough, so at least I'm regulated somewhere. But even though I want to be regulated locally, I cannot be because there is no regulation around it. That's why I'm not illegal. That's why the financial institution or bank can support my activities, because obviously I'm not doing anything illegal. So that's the argument. But now this is closing down. There are more and more countries who are getting their own license, their own regulation, and clarifying really clearly that this is what you're allowed to do. These are the bonuses that you can give. Those are the spins that you can do, and so on and so forth. So there are still some countries when there is no clear understanding on the regulations. So for those blanket licenses, which is the Curacao or even the Malta or Kawanaki or any kind of license is allowed to, create those activities locally. But yeah, these window of opportunities are really closing down. And obviously, the first thing that you will see is that you have a problem finding a payment provider or a banking partner to support these activities. Now, it's another question that what is ethical and what is not ethical, because banks and financial institutions might not support something which could be otherwise completely legit. Just to tell you an example, setting up an offshore company and running everything from there is not illegal. So when you are going to your legal team and you have a little bit of a chitty-chat of like setting up companies, I still see even the Big Four is advising then go to this island because there is no regulation, for example, blockchain, right? Open a Cayman Island fund, which is actually a really good regulation, but it's an offshore one. So just because it's legal, it doesn't mean that the banks will like it, because they still see that as high risk and they can reject you. So many times I see that the client is coming up to me with a completely legal setup. As you said, maybe a Curacao license targeting an area when there is no local regulation. And they say that, yes, my legal team told me it's completely legal. Why is the tier one bank is not accepting me? Why is the best payment provider is not willing to take the risk to onboard me and handle my payments? Well, because just because you're legal, it doesn't mean that you are within the risk appetite of the bank. Because in case that something goes wrong, there is a lack of regulation or a different type of regulation which is not supported by my regulator as a financial institution. So therefore, I'm not willing to take the risk with you. Now, the other thing which is important to understand that many of the financial institutions or banks or payment service providers mainly, they are working with so-called correspondent banks or connectors who are connecting the traffic to the open public and let you to join the international money movement. So for example, if I want to send some money here from the Czech Republic to the Philippines, chances are that my bank here in the Czech Republic does not have a direct connection and a direct communication with the Philippine banks. So in the same way as like there are connected roads in the world and you can approach from this village to that village through a highway, those correspondent accounts are facilitating all these money movements. But those correspondent bank accounts who are helping smaller banks to connect to the international money flows, they're also regulated under some kind of regulator, which could be different than the end bank or the end financial service provider or the end payment service provider's own regulator. So just to give you an example, I had a client who had activity in adult entertainment. And the same company opened a bank account in Europe, in euro, and they opened a bank account in USA in dollars. And the banks who opened those accounts were completely okay with the activity. It's a frowned upon but not illegal activity, it's adult entertainment with some clips, so they opened an account. The problem started when they wanted to send money from the euro account to the dollar directly. Even though those two bank accounts belong to the same company, under the same group, the correspondent bank was connected somewhere in the Middle East, whereby these activities, adult entertainment, is completely illegal for religious purposes. So they declined to be able to facilitate the transaction. And that was a big problem because the client in the middle, usually the banks don't need to give any kind of reply why the transfer is rejected or why the account is not going through. So that was a big problem because the client came up to me and they said that, listen, I don't understand. It's my account on the right, my account on the left, why I'm unable to send money directly to each other. And then we started to investigate, and then it turned out that the correspondent bank account, which was connecting these two banks, were indeed refusing the transaction. But this is a very simple case because you can see really what's going on. Many times, one financial institution might work with multiple correspondent accounts. So in this case, when you're sending money, for example, from Europe to Europe, it goes through a different system, which we call the SEPA, Single Euro Payment Area. But when you're sending it outside of Europe, it could be going through a different communication system. Usually it's the SWIFT system or any other system. US has their own system, which is the ACH clearing system, but in the UK there is like the box and the BIX and all these different kind of systems as well, which is how the banks are actually communicating with each other. Now the problem starts when the end user does not necessarily understand what is the bank account which they open, and they try to send money to different multiple places. And maybe the bank is not supporting that kind of language that they want to send the money to. So for example, SWIFT is the most popular, but there are certain countries which are not part of the SWIFT system. So in this case, you're trying to send some money to that bank, and that bank is refusing it because they don't have the common language to communicate, so they cannot clear out the incoming funds. You, as a business owner, might not know about this, and all you see is that my money doesn't go through. I had a client who was a European company, and he was a small client, and he said that I'm only going to trade in Europe. It was actually in Cyprus. He set up a company in Cyprus, and he said that I'm only going to trade in Europe. I only have customers within Cyprus and some in Europe. All my providers are in Europe as well. I went to Bank of Cyprus. Bank of Cyprus is obviously, it's a very paper-heavy bank to open a bank account. So he said that, listen, I need something tomorrow because I want to start trading. Help me. So we went to this neobank. It's something like Revolut, this online Monzo, these kind of place. And they offered very quick account opening for free. The guy was really, really happy. And he said that that's perfect. And then I saw that that bank can only open a so-called SEPA account, which is only trading in euro or pounds. It's only within the EU, and only EU banks can join these transactions. So I told him that, listen, with this bank account, you will be able to, pay yourself a salary and pay your suppliers and get the money from your clients, but it's only within Europe. Is that fine? Fine, fine, fine. 3 days, it opens, fine, 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 I want this. And in the meantime, we are still proceeding with the Bank of Cyprus or Piraeus Bank or whatever he wanted to open in Cyprus. Surprise, surprise, 6 months later, the guy comes to me and he says that this bank account is absolutely useless. I'm like, what's going on? Well, I found a cheaper provider in China, and I wanted to send some money to them, and they don't accept it. I'm like, I told you this is SEPA. SEPA, I don't know what is SEPA. I don't care. I just want to use the bank account. What kind of bank is unable to send any kind of transactions outside of Europe? So that was a challenge for him to understand that there are certain languages between the bank accounts. And in this way, he did not have a SWIFT account whereby he could send money outside of European Union. So what we had to do, we had to open another account which was supporting the SWIFT language in order to be able to send money in Chinese yuan into China. So this is just one example that if you, as a business owner, do not really understand how the money is flowing, who are the players which is supporting your transactions, and overall what is the risk that you are taking with certain financial service providers, as I mentioned, for example, the Canadian MSB, then you might not make the best decisions for your business, and you might actually take more risk than you should as a business owner. Any other questions or comments on this?
Just a question.
Yes.
Is the risk appetite for the banks depending on the legislation or on the system they are using, like the SWIFT you mentioned, or SEPA? Is the risk appetite differentiating between these two systems, like for the banks, or it doesn't matter actually?
Very good question. So the question was about the risk appetite. So when the bank decides to take on a new client, what is the criteria to evaluate that? Is it good enough for me or not? Now the answer is it changes all the time. And why? One financial institution might work with different correspondent bank. As we said, that you need to connect into the big picture and send money in a global scale. So different correspondent accounts have also different risk appetite. So let's say that I am a correspondent account. I've got one bank which is only dealing with low-risk clients. Let's say it's a supermarket, right? There is no risk here, big volume, that's great. So I have it under my portfolio. Then I have another bank, which is, let's say, a private bank, investment bank. They are dealing with investment, but super regulated. They only have like very old customers. The volumes are good, so it's like large volumes, but it's a bit more risky. It's medium risk, but overall, adds to my portfolio. Then I can see that, okay, I'm a correspondent account, I still have space for maybe onboarding more financial institutions with a bit of a higher risk and charge them extra. So in this case, I might say that, okay, I've got a low risk, I've got a medium risk, let's onboard this financial institution which is dealing with only high risk cases, right? Because if anything goes wrong, I still have a big volume of a low risk or medium risk to balance it out. So I'm providing these correspondent services. That guy is, even though that he's dealing with high risk, they're not doing anything wrong, everything is going well. Now, the problem might start when my low risk is losing their best customer, which is a supermarket. In this case, my whole balance as a portfolio is flipping over to the high risk. So now I'm left with a medium risk and I'm left with a high risk. In this case, I might not be able to maintain my operation in an acceptable way. So in this case, I'm going to my highest risk customer, which is in this case, this high risk operation, the high risk financial institution, and I might tell him that, listen, I love you, but I can't support you anymore. Unfortunately, I have to stop our cooperation here. Why? Because internally, my portfolio is not balanced. It didn't mean that they did something wrong or their clients are doing something wrong. It's just internally, as a financial institution, as a correspondent account, now my portfolio has changed and therefore I won't be able to support those kind of high-risk activities. So many times it's not even on the financial institutions level, and many times it's not even on the merchant or the end user level. If you are doing something wrong, there are multiple layers to this game. And the risk appetite is always changing based on, first of all, who is your correspondent account, what is the portfolio on the level of the financial institution as well as the correspondent level, and then it makes the decision that, all right, guys, from Monday, we don't support anymore iGaming companies. From Monday, we might onboard a bit of Curaçao licensed companies as well who have EU payment agents because we need the money and we have the opportunity to onboard the high-risk clients. So that's why it's very important that you as a business owner always have a good connection with your bank and financial institution and ask them all the time that what's happening now? Am I good? Am I not good? Tell me what's going on. Maybe I can renegotiate the fees because you like me, you don't want to lose me. Like, for example, in this case, if that supermarket could come back and renegotiate, I might just say that, drop the fee because I'm already covering up my cost and my profit from that high-risk activity. So I would rather keep that guy, even if it means it doesn't mean any kind of profit for me, just to keep my portfolio in balance. So there are multiple layers to this game, and that's why it's very important that you have a good relationship with your bank and monitor all the payment plan regularly. And you had a question.
I had a question like how the financial institutions adapt in crypto world, what is the future of the banks? Because the future of the money is going away, and how the banks are going to change.
All right. So remember what we said, that the banks are operating on two basic principles. They want to make sure that you're not cheating your tax, and they want to make sure that you're not doing anything illegal. Now, when it comes to crypto, it gets demolished completely because the most used crypto asset is still the Tether. So that means that the people might have trust in the system and the ideology, but what they are using it for is to actually use the dollar but bypass all the regulations. That's what the stable coins actually used for. Now, if you see it from this perspective, if you are a financial institution or a bank with a license, you need to make a decision if you are taking any kind of risk onboarding any clients who is doing on-ramp, off-ramp, or dealing with cryptocurrencies. That was an interesting story. I had a client, I know this guy for a long time, and I was doing accounting for him 15 years ago. And when this whole crypto haze started back in 2017, 2018, the guy called me and he says to me that, Victoria, I made a mistake. I'm like, what happened? I know that you're into crypto and this Bitcoin, let me tell you what happened. So I went on a crypto exchange and I bought some Bitcoin for 500 euros. And it was good, and I made some money, and it went up to 550, so I was like, that's great, I'm cashing out. As soon as I initiated the withdrawal and get the fiat amount on my Cyprus bank account, immediately the bank hit the red flag and they blocked all my accounts because now I'm connected to different kind of crypto trading and money is coming to my account for unknown sources. Mind, we are talking about 2017, 2018 when there was a big risk for the banks. There was a lot of anonymous wallets. There was a lot of cold wallets. We don't know where the money came from, right? So this guy happened to be not only an individual with a mortgage, and the mortgage repayments went up because his whole risk profile went up to the moon, but also he was a shareholder and a director of a Cyprus company, which had a bank account with this bank for years and years. And overall, they put him in a highest risk category, which increased his banking costs, which increased his compliance work, because now they are checking everything that I know that you had some crypto transaction at the past, where the money is coming from. So overall, the guy for 50 euro profit went through absolute hell. So just go back to your question. It depends on the bank if they have, first of all, the understanding, the capability, and the personnel to filter out all those transactions which are coming from crypto or the crypto exchanges or the origin of the funds are crypto. So many times I've seen that there's a financial institution. It doesn't have to be a big team. Let's say that there are like 5 people in the compliance department. That all those 5 people have no idea about crypto. One guy worked in shipping, the other one was working with iGaming, so maybe that's what they have a risk appetite for, because that guy is handling all the iGaming companies because he knows how the business works. And the third one and the fourth one, and no one knows about crypto. So in this case, many times they say that, listen, overall, we don't really understand crypto, so my compliance department is not good enough. I'm not going to take crypto. But then, maybe next month, they hire someone who used to work for a crypto exchange. And in this case, Bob is the new compliance guy. From now on, we are accepting crypto transactions because Bob knows what he is doing, and Bob knows how to do chain analysis, and Bob is the one who is going to tell us if the transactions is tricky or not. So it's very subjective. I do agree with you. There are a lot of future in these cryptocurrencies. However, MiCA and all the other regulation are coming mainly for Europe. So in this case, the banks have more faith and more trust even on those crypto exchanges as regulation, because now most probably the same or at least a similar level kind of regulator is going to monitor them as well as the virtual asset provider. So in this case, I know that at least someone is checking them, at least someone is giving them a license. So my risk to be the front line of checking and filtering out all illegit transactions and understanding where the money is coming from is lower than because I have someone else who is also doing it. So, you know, the double I standards and everything, that I understand that someone else is also checking what's going on with that transaction. Therefore, my risk is lower. Therefore, I'm more likely to accept those kind of transactions or activities. But in my opinion, we are far from that. And eventually, again, it's my opinion, the crypto is going to be regulated in an exact same way as fiat is regulated. Why? Because we do need to make sure that people are paying their taxes and not committing any crime.
How likely do you think that Europe will initiate a digital euro and then get rid of all this Bitcoin, Ethereum, and so on?
I honestly believe this is where we are going. The technology and the digital asset idea is going to be used, but instead of being decentralized and trusting the system to correct itself, which might not do, there is going to be a centralized body which is deciding where the money is going to, and you can actually connect self-executing codes to that money. Just to give you an example. Now, if I have €1 on the bank account, it doesn't matter which euro is that. It's interchangeable. But if the central bank is issuing money which is traceable, then I can say that when I'm paying you any kind of money, it automatically deducts, for example, the VAT, the tax. It automatically reports back itself to the tax office, so I can't cheat tax. Or if there is some money which is given to a certain purpose, so for example, social support or social credit, then I don't know, one member of the family is not going to put it in a slot machine, but actually goes to the children's education and food and well-being. So this is where the future is going to, and there are so many pilot programs which are now under consideration. The latest one was in India, whereby the government is issuing these so-called central bank digital currencies, which are almost the same idea as the blockchain, but it's in the centralized way. So the central bank is issuing these kind of amounts, and they are building a whole system and a whole technology around that, which is supporting that the money is going where it's intended to go. That was my time. 1 hour just passed by really quickly, but I would like to encourage you that have more questions for me at any time. I'm still going to be here, and I have 5 books left. So if you haven't done so, please let me know if you would like to have a book. I'm very happy to dedicate here, and feel free to hit me with all your questions. Thank you very much.